Let's do some common sense now with Craig Bolanos, the founder and CEO of Wealth Management Group. Craig, Fed officials have their hands full with the collapse of some regional banks recently, falling inflation, and the red-hot jobs market. What are your takeaways from last week's Fed meeting and that rate decision?
Well, Angela, I have to say that was one of the most anticipated Federal Reserve meetings in years, and a lot was riding on the outcome, and most certainly the events leading up to March 22nd, the Fed meeting, bank failures. Well, it made for a newsworthy meeting, a lot of policy, and, there's three big takeaways I think we can have from it. Takeaway number one, first, a pause. While it was discussed, it was eventually dismissed. And of course it made sense, with the bank failures, with the problems that were there, the veracity of those regional bank issues, it made sense that people would think about taking a pause on interest rates might be needed. But after the government created the Bank Term Funding Program, it is clear from the meeting notes that the board members believe the conditions for increasing rates were stable enough because the risk of contagion has been widely diminished. Second on my list of takeaways from the Fed meeting would be, tighter financial conditions are equivalent to a hike in interest rates anyway. The Fed doesn't necessarily need to raise rates as much as they expected because the financial conditions in terms of lending and other items as a result of the bank issue, that's going to take care of it on its own. And I think it isn't going to be surprising that some of the psychological damage of hearing about the bank funding, that might cause consumers to slow down their spending in the near to intermediate term, hence doing the Federal Reserve's work for them. Takeaway number three on this last Federal Reserve meeting is the Fed officials, they don't actually expect a rate cut. And I lean in, I say that because maybe the stock market and the Fed are at odds with each other. And who's actually going to be right? Well, only time's going to tell. But I will tell you there's two things that the Fed and the market must agree on. And you know what it is? It's that the outlook for inflation continuing to drop over the course of this year looks a lot more promising than it did a mere 4 to 6 weeks ago.
Break down exactly what this means for investors who might be thinking about getting in or out of the stock market.
Well, let's just call it the bottom line, Angela. Investors' wishes might actually come true. The contagion risks, they're low enough for the Fed to hike rates, and the inflation pressures, they're soft enough for the Fed to be near the end of the rate hiking campaign. And with inflation easing further into the latter half of this year, we may end up seeing some investors being interested in taking on more market exposure in their portfolios in the latter half of the year. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We're here to help people get retired and stay retired. If you'd like to learn more, you can. Check out our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.